Welcome to the Kindle Report. I want to thank everyone that came to the live stream yesterday. There were several themes that ran throughout the live stream, especially in the first hour. I went into a deep analysis of a lot of things going on in the economy around energy and some of the things that the current administration is doing to choke down the output of the oil community, mainly for the green energy. Make sure you go and watch that. I think there were some interesting points that came out of that. And there's also a theme that came out that the energy trade is going to continue. I'm going to keep tonight's video very brief just because of the long live stream, so make sure you go back, and we've noted all the sections on what I was talking about during that 2.5-hour presentation. As we come into Thursday, I thought that the ADP report was coming out on Wednesday like always. It's actually coming out today. It's expected to show 695,000 jobs. So we're getting closer to the ultimate report we're waiting for this week, which is unemployment numbers. I'll go through a lot of detail for that in tomorrow night's video. But for now, we're looking at the ADP coming out. We're also looking at claims coming out, showing about 395,000 new claims, and the continuing claims came in last week at 3.62. I don't see a lot of movement in this number. And if it does get under 3.2, that would be significant. Also, we're going to get the ISM manufacturing numbers today. Those are expected to come in around 63.5. I don't think any of this stuff is going to be material. As we look back on yesterday, the S&P was up 0.1, NASDAQ up 0.1, and the Russell up 0.1. So it was a very lackluster session. There was not a lot of movement in the ranges. It was very boring for the most part. And I suspect to see a continuation of that. As you'll see when I go through the technical section tonight, the market grid continues to be very narrow, and this just suggests that volatility is likely to stay low for several more sessions. I'm hoping on Friday that we'll get some increased volatility, but that's yet to be seen until we see the reports and what type of action would come out of this. The markets appear to be coiling up right at this 4,200 level. I laid out the extreme levels that I expect for the month of June. That's worth watching on the live stream. But in round terms, it was basically an extreme downside around 4,100, the upside up around 4,325 or so. There's very little to discuss tonight as far as anything coming out overnight. Futures are incredibly quiet. So let's go ahead and get into the charts, see how they're set up for Thursday's opening. As I review the WaveTech database, we did see more buying. We saw 923 buy signals, 248 sell signals. The bullish percent is now right at 63%. As I discussed in last night's video, if we can maintain above the 62%, we should move to 68 to 72, and that will set the next phase. At that point in time, I believe we'll start to see the markets move higher. We'll move through this 4,200 level into the 43 handle, but this is going to be grinding here for several more days. Possibly the unemployment report or some other news might actually trigger this thing to start to move higher, but the traction in the database is significant and is suggesting that we're going to see a continuing trade. Right now, the average duration of all the trades on the short-term basis is 10.6 days. Normally, those models hold about 40 days, and they do extend sometimes to 50 to 60 days. So we're still 30 more days out before we start to get long in the tooth in this database at this point in time. As I covered the S&P futures, we are seeing some backfilling on the indicators from the PPMs. Our PPM1 is now only up 0.13, a little bit vulnerable to the downside on the 10-period moving average. As we look at the market grid for today, so far overnight we've had a low of 42.06, a high of 42.13. R1 is 42.13, so we've hit a direct hit on R1. S1 41.99. I suspect we will see an S1, possibility of seeing S2. We are seeing some of this weakness, as I mentioned, in the PPMs right now. There's a vulnerability to the downside, but I do think it's limited on an extreme level down to about 41.69 to 41.63, which is the 21 and 40-day moving averages. We are starting to see a little bit of pickup in ppm2, but we're in a very neutral phase right now. As far as the trend mode goes, we are completely neutral on a short-term basis. As I review the SPX, the narrow range on the market grid continues. We look at the grid for today. S1 is 4202. I expect to see probably an S2 4196, R1 4213. We continue to get rejected up here around 4220, 4230 is a very strong resistance. This pattern that is unfolding on the market grid is somewhat vulnerable to moving down into the moving averages, which are currently at 4182 down to 4164 on the cash. That would be the extreme range, at least for the very short term on the downside, if we did see some selling come in. I don't expect this is going to happen today I don't expect to see this happen today with the unemployment numbers coming out on Friday. The next market I'll cover is NASDAQ futures. We're seeing ppm1 actually slice through its first derivative. That's a bit negative, just as I discussed in the S&P futures. We are seeing some downside potential here. I do not see this market dropping below the 21 period moving average at 13,483. As we look at the market grid for today, the low so far overnight has been 13,672, 13,645 is S1. It's very possible we're going to see an R1 would be 13,702. We've actually printed that already, and a move down to as low as the S2 level at 13,614. Just like with the S&P, these moving averages are in a very tight range. They should supply support, even though they're clustered together very tightly. And the extreme here is 13,483 in the pattern, which is the 21-day moving average. I expect to see this market continue to stay in this sideways mode into Friday's news. I'll update this further on Friday's commentary. The final market that I'll cover is gold. Gold continues to hover just above the 10-period moving average. The ppm1 has stabilized a bit. ppm2 is actually at a trend mode, 0.30. ppm3 is at 0.20. So we're basically at trend level across the board. We should see the 10-period moving average continue to hold. As we look at the market grid for today, the range so far overnight is 1906 to 1912. R1 is 1913, so for the most part we've satisfied R1. S1 is 1906, so we've actually hit that low. I do expect to see us going back toward S2, maybe back to an S3. These ranges are fairly tight, but it does appear that there's some downside risk evolving from this pattern. So make sure that you go back and watch the segments on the analysis on all of these markets that I did on the live stream, as I talked about a lot of the intermediate and longer term patterns. This will complete the video for tonight. Thank you for watching. Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/WaveTech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much.